Hey, welcome to the 40 Finance channel, everybody. Today I'm going to have some fun and do my FAANG stock projections. These are price projections through the end of 2022. So somewhere in the neighborhood of December, maybe bleeding into January a little bit, where I think these stocks will sit. Now for my FAANG stocks, I'm going to include Microsoft. We're also going to include NVIDIA and Netflix, take out some of the controversy on which names belong into FAANG. Now, when it comes to valuation multiples, aka the PE multiples, looking ahead through the end of the year, I think that we're going to stay in a relatively logical place, right? And I would say that we were not in that place a couple years before now. So I'm expecting PEs not to go down to lowest historical levels. I expect them to be in a logical place where the interest rate is going to be, give or take, 2%, maybe 2.5%. So when it comes to investing and you have to choose, what's the best place for your money, considering risk rewards, I still think that interest rates at 2.5%, you'll have to consider the stock market to make your money grow faster. We'll see how that turns out. So let's jump in, go through the stocks, see where my price forecast stands for each of the FAANG plus M names here in March, the end of March of 2022. Okay, we'll kick things off with Facebook/Meta. Year to date, this one is down 34%, currently sits at about $221. You have a forward EPS right now of $12.42, and you have a forward PE right now of $17.86. Important to call out here that these EPS and PE numbers here on SeekingAlpha on the main stock page, these are forward numbers for the next 12 months. So depending on what a company's fiscal calendar is, they may or may not align with my target, which is guesstimating the price of the stock at the end of December here in 2022, perhaps bleeding into the first part of 2023. All right, let's take a look at the earnings estimates as of right now for Facebook. Keep in mind that I'm looking ahead, and I'm looking ahead in my projections, which means I have to look even farther ahead in projections. So for me personally, December 2022 isn't going to work very well because I'm actually trying to project what the forward sentiment would be for 2023. Obviously, every company's different fiscal calendars, etc. But for right now on Facebook, for the 2023 fiscal year, you got $14.79 as an EPS estimate. Okay, at today's price, that's a forward PE of $14.99. And from a revenue side, which to be honest, I'm not doing much of anything with the revenue numbers. I'm focusing on earnings here. But December 2023, $155 billion. That would be 17% up from 22 if everything aligned, and your price to sales would drop below 4. All right, now let's transition to my projection. So today is the 28th. Price about 220, forward PE of 18. Current forward EPS at 12.42. When we get to December, late December of 22, my target price is $357. That is based on a forward PE of 23. So I'm saying the forward PE actually goes up for Facebook as we get to the end of the year. And on the EPS side, that will go up too. The target will be closer to $15.53 in my opinion at that time. That gives Facebook a potential gain loss, depending on how accurate I am, of plus 62%. Next stock on the board is Apple. We have year-to-date return of minus 4%. Got a forward EPS of $6.16 and a forward PE of 28.38 right now for Apple. Looking at Apple's earnings estimates, here's an example of an odd fiscal calendar, or sort of odd. Basically, everyone else's Q3 is the last quarter in Apple's fiscal year. So really right about October or into November, after they report this number, all eyes will be on 2023. And you can see what we have here, an estimate right now of 655. That would be year-over-year growth of 6.45% on top of what they would grow here in 2022. And one of the things you're going to see with my price forecast, this is very high for Apple. Forward PE of 26, to be honest with you. It's something that Apple's been able to pull off for the last couple years. If they have continuously outperformed to the point that I really hate to doubt them, but I'm not going to give them quite as high of a score here, or quite as high as a multiple, I should say, as this almost 27 that's on the books right now. Let's look at potential revenue growth. September 2023, if they hit 417 billion, single digits here, 5.57%, gives you a forward price to sales just under 7. That's another number that in terms of historical averages, Apple is trending well ahead of. All right, now as far as my projection, today you're at 174 with forward P of 28, forward EPS 616. Looking ahead to December, my target price, look guys, 156. And I gotta say, it was really shocking for me to see that number, which is minus 10% from where we are today in the middle of March. It really doesn't seem to make sense, but I can't get past how high their forward PE is right now at 28. So I lowered it to 22, which was still a couple points above their historical average over the past 4 or 5 years. And I generously boosted their forward EPS from somewhere in the neighborhood of 616. I moved it all the way up to 710, and you can probably even argue a 720 in there, the way they've been buying back their shares and have typically outperformed. But the way I see it right now, Apple, oddly enough, is a little overpriced. Now, as much as I'm saying all this, can I tell you that I've done this exercise before with Apple, and they have always outperformed. Like, it's amazing. But if anything else right now at 174, no matter where you think it's going to land in the short term, it's probably safe to say you can wait for a dip or some sort of market downturn before you jump in at this 174 price. All right, next stock on the board is Amazon, currently at $3,340. Amazon has a stock split coming up, 20 for 1. So we'll work that into our price target, try to keep some consistency so everybody can see what's going on. Right now, the forward EPS is 49.26, and the forward PE is 66.90. All right, let's take a look at the projections. 2023 is an interesting year for Amazon because it's supposed to be the big payoff for a lot of the logistics investments that they've made. So you see how big of a jump we've got here on EPS, plus 49%. Now that sounds high, but keep in mind that this year they're going to be down about 20% if they hit this number of 49.26. So while this is a plus 50 and it seems a little strange to see it jump that high, it's really because a lot of the cost variables are being eliminated, ideally anyway, through the end of 2023. Now, if they get to 73.86, that would be a forward PE of 44.62. On the revenue side, pretty consistent growth on the revenue side, 15% this year, potentially 17% in 2023. Price to sales under 3 if you're looking 2 years out. So generally speaking, I would say that Amazon's in a good position to grow from their current stock price. However, how much you buy into this $73, $75 for 2023 earnings is going to play a big part in how you project their stock price. All right, now from where I sit, I'm a buyer of the 73 some odd dollar EPS for 2023. And if that continues on, I've got a target price of $4,015 for the end of 2022. I pulled the forward PE back from a level that it's at today. It's in the neighborhood of 67 today. I'm pulling that back to 55, which is a little bit more in line with tempered expectations in the current economy. But I did give them the full EPS projection, so 55 times 73 gets you to 40.15. That is a plus 21% from where we sit today. All right, next we've got Netflix, which has just been crushed this year, minus 37%. You have forward EPS of $11.14, forward PE of 33.55. And Netflix is similar to Amazon in the sense that they have invested a lot into their content production over the past year or so. But if you're a bull on Netflix, you know that some of those costs are supposed to go down while international expansion helps to improve the bottom line. Let's take a look at the earnings estimates here on SeekingAlpha. And quick pause, if you're interested in learning more about SeekingAlpha, my affiliate link in the description gives you a significant discount to a 1-year subscription in SeekingAlpha. Definitely check that out if you like what you see here today. In December 2022, we talked about the 1114. We're looking at 2023. 1456 is your current EPS estimate. That would be 30% growth year over year. So you see the problem with Netflix here in the short term is flat to negative EPS growth for 2022. Now, once we break through the clouds of this year, if you will, that EPS starts to grow again, just like Amazon, to the tune of plus 30% if they hit this number in 2023. All right, what about the revenue side? You've got a lot of people who think, Disney Plus, streaming wars, all these things are going to kill Netflix. Don't forget, though, they have an entire international market to expand upon. And in 2023, and frankly 22 as well, you've got double-digit revenue growth anticipated. That puts your forward price to sales under 5 at today's price, so not a bad place to be for a company that's growing both the top and bottom line. Okay, from my desk, I'm putting a price target of $490. That's plus 32% from today. Ironically, though, as big as that number sounds, if you think about the fact that Netflix is down 37% here in January, it's not that tall of an ask. You can see that I gave the EPS a little bit of padding to incorporate the future profits at $14. I also raised the forward PE from 34, just 1 point to 35, because I think personally that Netflix is kind of beaten down in the sentiment right now, and they're probably just a couple wins away from getting a boost on their valuation multiple. All right, let's look at NVIDIA. Year to date, down about 8%. EPS forward, $5.63. Forward PE of about 50 for this one. Let's see where NVIDIA sits on estimates. You can see how this says January of 2023. Their 2022 fiscal year doesn't end until the sort of middle or back end of January of 2023, right? So a little different reporting structure there. And with that in mind, since I'm targeting December, we're going to stick with this 563 as the year that we're focused on. That would be 27% growth over last year. And of course, forward PE of 49.18. Now, on the sales side, 34, call it 35 billion. That'd be about 30% growth this year. Put your price to sales at 1993. And if you're familiar with the semiconductor industry, which of course is doing very well here the past few years, that's still a pretty high number on forward price to sales. And if you look at other chip type companies, nobody else is getting a 49 on their forward price to earnings. So that definitely came into play when I made my projection. All right, speaking of my projection, target price of $240. Keep in mind it's $274 today. We talked about the forward PE of 49. I personally see that falling. I gave it a gracious 40 is about what I would say. And then on the EPS side, SeekingAlpha's at 563. I'm pushing that up to $6, maybe even hit 610 or 620. Really hard to tell. However, there's no getting around the fact that the multiple right now at a 49 forward PE, that has much more room to the downside as opposed to the upside. And when you start stacking the multiple up or down, it really plays into this price. So I'm sticking with my 240 unless we see more news from NVIDIA that would suggest that they're going to outpace even their own expectations. Okay, how about Google? $28.19 price today. EPS forward of 116.05. PE ratio forward just under 25. Google, similar to Amazon, is also doing a 20-for-1 stock split, so I'll reflect that in my projections. But let's take a look at the estimates here before we jump over to my take. And we've got the 2023 year, which is about what we'll be looking at come December. EPS estimate of 136 plus 17% over the 22 estimate of 116. That would put your 2-year forward PE about 2071. And on the revenue side, pretty consistent. You got double-digit growth, 17%, 15%. Brings your price to sales in the neighborhood of 5 or 6, which, might be a little high for this level of growth, but it's really hard to argue against Google when you think about that EPS they're putting out. All right, on my end, keeping in mind that 20-for-1 stock split, I've got a price as it stands today, $3,336. That equals $167 after the stock split, so we'll see what happens there. That's plus 18% over today's 28.06. And I kept the forward PE, I kept that constant throughout the year. However, the EPS is projected to go up. So you get that additional $23 or so because that's what's going to be calculated into forward projections as we reach December. All right, last one here is Microsoft, currently at 307. Forward EPS, $9.44. Forward PE of 32.17, which, spoiler alert, is pretty high for what Microsoft has done in the past. Let's take a look at our estimates here. And you've got this year is June of 2022 when it ends. So Microsoft basically ends in the middle of the year. July 1 kicks off their new fiscal period, makes it a little bit harder to project. But if they hit this year at 944, it would be 18% growth, 32.17. I think the way their fiscal calendar falls, though, people are already looking towards 2023, okay? And there you have an EPS estimate of 1076, and you have a forward PE of 28 on sort of the 2-year view. Scrolling down to revenue here, just under 200 billion, that would be plus 18%. And then in 2023, if you get that far, 226 billion, it's another 13.9%. But take a look at this forward price to sales. And it's a similar story in some ways to NVIDIA. NVIDIA was in the 20s. Microsoft, though, at 10 is still pretty high for them historically. So this is another one where I'd say the risk isn't that Microsoft tanks or loses half its value. I would just say that the risk is more to a flat or downward trend as opposed to an upward one when you think about the fundamentals and you think about the rest of this year. Okay, so where did I land on Microsoft? I'm giving it a price of $296 for December, minus 3% on where it is today, which is 307. The big change here, forward PE today of 32, I'm bringing that down to 25. We'll see if that ever happens or if the market continues to pay up for this stock, but I'm using a 25 as the average. And then my EPS, I was very generous. Gave them over $1 on the projections. So 944, I'm boosting it to 1182. But once you start fiddling with multiples, and we've seen it in this market already through the first of the year, once you start going from a 32 to a 25, makes all the difference in the world. And that sort of leads me to a flat to slightly under point for for Microsoft heading into the end of this year. Now, those are all 7 of the names. Just for my own curiosity, I added them up. So just the current price today across these was $74.72. My price targets, using the pre-split numbers, if you will, $88.90. That's still a plus 19% for these stocks as a group. So if you're a regular viewer, you might say, well, here's a guy who's down on Apple, NVIDIA, potentially even Microsoft. Like, why is he so big on the QQQ? Well, if you put it all together, I think there's still value to be had in these FAANG names. It's just maybe not in the most popular ones today, right? So a plus 19%, these are the big names in the QQQ, which is a very top-heavy market cap weighted fund. And I still have confidence that it goes up from here. And the thing is about the ones I'm, arguably picking against, one I've already told you, Apple somehow always comes out of the woodwork with a shiny new object. So I wouldn't be surprised if this numbers change over the course of the year. NVIDIA, I think, is a little hot, but, they have continuously outperformed in terms of technological production. And then Microsoft, who would really bet against Microsoft, right? So it wouldn't surprise me if any of these 3 dogs that I have on the board right now turn things around and maybe outperform. Now, as the year goes on, you can see I did the posting date here. I'm going to fill this in 3 or 4 times this year, and we'll look at it together, and we'll get a feel for how my target price changed and how the fundamentals of the company changed over time, and we'll see how close we get heading into December. All right, so that's my FAANG plus M stock price forecast here for 2022, at least the early part of 2022. Let me know what you think in the comments. Where am I off and completely? Which ones do you agree with? How do you see the year playing out in your portfolio? And don't forget, before you go, check out that Seeking Alpha special offer in the description. And as always, please give the video a like, share with your friends, all the things. We will see you on the next one.